TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Sachin Bansal-led Navi Technologies gets SEBI nod for its initial public offer. As per Money Control, Navi Technologies had filed draft papers in March this year with SEBI to raise up to 3,350 crore rupees through a fresh issue of shares.
Mensa Brands acquires peanut butter maker MyFitness for an undisclosed sum to make inroads into the health food category. Through this partnership, the e-commerce roll-up unicorn will bolster the brand's footprint, launch new categories, scale D2C business, invest in brand building and expand into global markets.
Yulu raises $82 million in its Series B funding round led by Magna International. The mobility startup is forming a new entity, Yulu Energy, with Magna to create nationwide battery charging and swapping infrastructure to cater to the demand from Yulu and other EVs.
SEBI is taking a close look at how private equity houses and venture capital funds value the startups and unicorns they bankroll, as per a report. The capital market regulator had asked a large number of funds to disclose their valuation practices, any significant change in the valuation methodology in the past 3 years, qualification of the valuer, as per the report.
WazirX announces that the ED has unfrozen its bank accounts, allowing the platform to resume banking operations after almost a month. And I quote, due to the active cooperation extended by WazirX and active anti-money laundering checks that led to the blocking of suspicious accounts, ED has unfrozen the bank accounts of WazirX. WazirX is now in a position to continue its banking operations as usual, end of quote, it said in a blog post.
Twitter said payments made to a whistleblower did not breach any conditions of its $44 billion buyout by Elon Musk. In a letter to Twitter, lawyers said Musk said Twitter's failure to seek his consent before paying $7.75 million to whistleblower Peter Zatko and his lawyers violated the merger agreement, which restricted when Twitter could make such payments.
Ubisoft, France's biggest video games maker, is still open to other partners after a deal in which China's Tencent will raise its stake in the company. Its co-founder and CEO Yves Guillemot told Reuters. The deal values the Assassin's Creed maker at about $10 billion, and Tencent would become its single biggest shareholder with an overall stake of 11%.
Well, those are the headlines that we're cracking for you this evening. Mobility platform Yulu, that has raised about $82 million or 653 crores in Series B funding, which is led by a Canada-based mobility technology company called Magna International. Now, with this, Yulu hopes to expand its electric vehicle fleet to over 1 lakh two-wheelers and install more than 500 battery charging and swapping stations. Magna will also partner with Yulu to establish a new company which is called Yulu Energy, which will build a nationwide infrastructure for battery swapping and charging to meet both its own as well as other manufacturers' demand. And just last week, on Friday, in fact, we caught up with Yulu's co-founder and chief technology officer, Naveen Dachuri, to talk to him about the company's growth plans. Hear out what he had to say.
We have close to 10,000 vehicles. 70% of our fleet, we are using it for the last mile delivery. We are unit economics positive, and the growth wise, our plan is in next 1 year, we want to grow 10x. We have all the things lined up. Our biggest dependency now, or I would say the bottleneck now, is on the supply chain, where the whole OEM world is seeing already the supply chain constraints when it comes to especially the e-bomb components or the electrical components. But that is our plan. And with that plan of 10x, we are expecting that we will be doing close to, again, 300 million, close to 300 million battery swaps. And for that, we will be setting up close to 500 charging stations pan-India. Expansion-wise, our plan is to go to eight cities.
Well, that was the founder on Yulu's EV play. And to talk about Magna's plans on foraying into the micro-mobility market by investing $77 million in electrified shared mobility provider Yulu and the new battery swapping entity, joining us now is Magna International's Executive Vice President and Global Lead for Magna New Mobility, Matteo Del Sorbo. Matteo, many thanks for joining us on Startup Street. First up, tell me what made you bet big on Yulu? What synergies did you see? And how big is the India market for you?
Well, thank you very much for having me this evening, and welcome to everybody. It's been an incredible last 12 hours with our announcement. Magna is a technology mobility company and the world's 4th largest automotive supplier. Yulu is India's largest electrified mobility platform for two-wheelers. The combination to offer sustainable, affordable mobility to millions of people in India was unmatched, and it provided a great opportunity for us to support India's government's vision for clean mobility.
So what exactly, Matteo, is the plan or the arrangement that you have with Yulu? We understand you're going to be the exclusive battery swapping partner for them?
Yes, we will for Yulu Mobility, but we also will have other customers as we try to deploy a interoperable battery for other customers. Personal users with subscription models will be our goal in the short term as we ramp up production here in the fourth quarter of this year.
Okay, all right. Matteo, you know, Magna is one of the largest automobile parts manufacturer in the world. In fact, in 2021, you forecast a $4 billion EV-related product and component sales by 2025. Tell me what makes you bullish, and how soon do you see governments mandating a complete shift to EVs across the world?
It's a very good question. I wish I had the answer for what the governments are thinking. Of course, we want to be at the forefront of technology. Magna has been for 65 years following the mega trends, and we feel that electrification around the world will continue. And with our product offering, we plan to be a major force in this area.
You know, Matteo, when we talk about the EV market in India, it's very much focused on the two-wheeler space. Of course, now we have you also investing into Yulu. Tell us about your plans on that front for the India market. Do you think you'll also look at the four-wheeler space at some point of time?
I think we'll leave all our options open. Of course, India is an important market for Magna. We have 12 manufacturing facilities and 3 engineering centers. We employ over 5,000 people. We're starting with the two-wheeler, but of course, this technology can be transported into three-wheelers as well as four-wheelers. And our competence and building blocks and technologies in the four-wheel market globally should put us in a very good position as well for this in India.
All right, all right. So the option is open for three-wheelers and four-wheelers as well. Matteo, there have been persistent rumors regarding Magna as a likely candidate to build the long-jesting Apple car. The projected EV has been in the works since the launch of its Project Titan in 2015. Is Magna the leading contender to build the Apple car?
Well, you knew the answer to that question before you asked it. We don't speculate on future customers and contracts. Of course, we are a perfect partner for all new entrants and companies coming to market with a new platform. We've done that very successfully for over 65 years now.
Well, you may not tell us about Apple, but you surely can tell us about Fisker, the Ocean SUV. That's been much of the talk of the town. And you're expected to begin production for the SUV later this year at your Austria plant, we understand. What are the reservation figures like already? Because you've announced plans to ramp up production to about 150,000 vehicles by 2024. Will you be able to meet demand with that? Do you think you'll have to scale further? Where is this demand coming from?
So Fisker's outlook, obviously, they'll have to respond to. We've put capacity in place for 50,000 units a year in Graz, Austria, with the opportunity to scale up to even a higher number. Fisker is a very important customer for us. As you know, this is launching later on this year and will demonstrate a lot of Magna's capabilities and technologies across the entire vehicle, with many of the components being manufactured, designed by Magna International around the world.
Okay. All right, Matteo, we've completely run out of time, but many thanks for joining us on Startup Street, and wish you the very best with all your future plans.
Thank you very much for having me, and good evening to you.
All right, moving on, also on what's brewing. D2C technology-led house of brands, Mensa Brands, has entered the health food category by acquiring MyFitness, a first-of-its-kind and fast-growing peanut butter brand in India. The partnership with Mensa Brands will strengthen the brand's footprint, enable it to launch new categories, scale D2C, and expand to global markets. And to tell us how, joining me now is the founder and CEO of Mensa Brands, Anand Narayanan. Anand, welcome back to Startup Street. You enter the health food category with MyFitness. What excites you about this space and about MyFitness? Also talk to us about the reach and the current footprint of MyFitness.
So the first thing that excites me is this is our first brand that you can consume every day.
Okay.
So frequency matters. You can see the MyFitness peanut butter right here. I'm actually a consumer, right? So I've been having it for a long time. What excites me about this space is, look, peanut butter itself is a 600 crore market, growing at about 30% year on year. We are the fastest growing brand. The reason we love partnering up with Mohammed, Rahil, Poojan, and many of the other MyFitness folks is They've built a fantastic brand, great customer quality. We had plenty of users. I always look for customer love as the single biggest indicator for actually partnering up with the brand. So we believe that I think with our playbook, and Shruti, we've spoken about this before,
yes,
our ability to scale D2C, our ability to go omni-channel, our ability to take this brand global, for example, to the Middle East, all of which I think are going to be very exciting.
Okay.
We think we can build 1,000 crore brand.
Yes, and in fact,
fitness health space.
Yes, and in fact, I was going to ask you that you claim to build MyFitness into 1,000 crore rupee brand in the next 3 to 4 years. If you could elaborate on how you plan to do that and what makes you bullish.
Yeah, so I think 3 things. The first is the space itself is growing very rapidly, right? So essentially, it's growing at about 30% year on year, the market. We believe we can grow between 100 and 150% year on year, and I'll tell you a little bit about why. Second is we believe the right strategy for a food brand is a combination of online and offline. So omni-channel is going to be important. And I think we have a lot of synergy there because we have multiple other brands which have GT, general trade and distribution, and we believe that we can get synergies there. Third, we believe that just our tech-led way of how do you do growth hacking in each of the marketplaces, whether it's Amazon, Flipkart, any of these, right? Or Big Basket, or any of the quick commerce ones, we believe that we can actually really help these brands grow in these platforms because we understand the tech and we understand how to do growth hacking. Lastly, I think that for a brand to get to 1,000 crores, Shruti, you need to actually go from a push to a pull brand, which means that the brand needs to become known and people need to be searching for this brand as opposed to peanut butter and this coming up on top. And I believe that just the level of expertise around how to actually build a food brand is going to be quite exciting for us. So I think all of these 3, 4, 5 things will be very important. We are going to be launching new categories. We will launch other butters, right? Not just peanut butter, which we think is going to be big, and I think it'll continue to grow. So all of these 3, 4, 5 things is what makes me very bullish. It's also a space that's growing. I also feel like MyFitness as a brand can continue to scale into other forms of healthy food that I think we're actually quite excited by. So all in all, I think this is one of the things that we're very, very bullish about.
Hi, Anand. This is Ritu. So where will MyFitness stand in the overall scheme of things in the market? Because, you have both the deep-pocketed conventional players in the space. You have a lot of new age companies as well. How will you position your brand and what is going to be your moat, really?
Yeah, so look, I mean, the best thing about a food brand is actually its taste. So one of the things we did when we were thinking about this partnership is actually do a blind test across multiple peanut butter brands. And in the blind test, this came out completely on top. So I think the first is just very high quality product. And if you actually go to Amazon or to Flipkart or any of these marketplaces, you will find a ton of reviews, and the reviews and ratings actually become a real moat over time. Second is, I think Rahil, Mohammed and team have built a fantastic backend process. And so the quality manufacturing becomes a second moat, right? And third is, I think we have a first mover advantage in many ways. And I think because they're now part of Mensa, we also have the ability to scale them offline very inexpensively, very quickly, through a tech-led manner. So I think all of these things is what really gives MyFitness the moat. It's a large market share player already.
Yeah.
I would recommend, it's roughly in the 20-25% range in terms of market share. And I think, by the way, that we can continue to hold and the market itself will continue to grow.
All right. You already mentioned that besides peanut butter, you'd be looking at launching other kinds of butters or other categories. Could you tell us a bit about that, what the expansion plans are? And besides peanut butter in the health food space, would you be looking at more products?
The short answer is yes. Can't reveal all the secrets before they get launched. But I think, look, the name itself lends itself to some fantastic stuff, right? It's MyFitness. It can go into many different things. Our positioning is very much, by the way, about fitness and using this as a way to actually improve fitness. So it's a very clear brand positioning. And I think we believe that that's going to be, I think, a big differentiator. On the products, you'll see it soon. Hopefully in the next month, you'll start to see a couple of new launches happen already.
But Anant, if I were to ask you, what is going to be the contribution of health foods in the overall business in terms of what kind of revenue it could generate in the medium term? Yeah. And besides this, when you talk about expansion, are you going to be looking at other acquisitions as well, or will you look to grow organically from the brands that you have?
Yeah, no. So look, I think on the food space, we would love to have MyFitness as the anchor and build around it. So I think, will we be open for acquisitions? Of course, but I think we will do it through the MyFitness sort of vehicle and say this is the anchor for the food space for us. The second, I think, to answer your question, I think long term, this can be 10% to 15% of the overall Mensa portfolio. As you know, we're in fashion, beauty, and home. We have now 23 brands, and the brands are growing very, very rapidly. We are EBITDA profitable, not unit economics, not anything else, but we're EBITDA profitable, so we don't actually burn money. So it's a very sustainable business model that we can continue to grow and scale. And I believe that food will become at least about 10% of the overall Mensa portfolio over time.
Well, that's some interesting statistics there. 10 to 15% of the overall Mensa portfolio. That's huge. So we'll watch out for that one. And thanks very much for your time here. Thank you.
Thank you. Bye-bye.
With that, it's time for us to head into a short break. Coming up on the show, Wow Momo Foods, that operates 3 brands, Wow Momo, Wow China and Wow Chicken, recently raised over $15 million. A special conversation with Sagar Daryani, co-founder and CEO of Wow Momo Foods, about their future roadmap. Stay tuned. Welcome back to Startup Street. QSR chain Wow Momo Foods, that operates with 3 brands, Wow Momo, Wow China and Wow Chicken, recently raised over $15 million from Oaks Asset Management. The Series D funding is a part of a 2 tranches raised, with the second one being planned with another VC fund. The fresh funds will enable the brand to build strong back-end capabilities to enter into Tier 1 and Tier 2 markets in India. And to elaborate on the road ahead, joining me now is Sagar Daryani, the co-founder and CEO of Wow Momo Foods. Sagar, welcome back to Startup Street. Like I just mentioned, the second part of the Series D funding round is being planned. How much more are you looking to raise in the extension round? Who are you in talks with, and how soon do you plan to announce it?
Well, thanks, Shruti, for having me here. We have raised 125 crores. We're going to be raising another 125 crores more.
Okay.
By God's grace, because we've grown so fast and profitably, we're seeing a lot of investor traction. I think we should do it in the next 3 months' time. We've signed a few term sheets. Cannot reveal name now because, it's NDA, but looks good. The primary capital has come in. This will be another primary round. There are chances that, if a larger investor comes in, we might also give a small part exit to our current investors who came in much, much earlier. However, no one wants to go out. They all want to stay. So, it is a bit of a catch-22 situation, but I'm happy to be in this space.
Okay, so you're looking to raise another approximate $15 million. Sagar, Wow Momo Foods has a presence across 21 cities in India with over 480 outlets. With the fresh funds raised, you now plan to enter over 100 cities. If you could elaborate on your expansion plan, also give me a sense of the kind of business you're currently seeing with all the 3 brands.
So not 21, 22. We just opened a new city today. We entered Siliguri today, and another 2 cities opening this month. So we're entering Indore and Patna. But yeah, I think it's an exciting time. Our moat is very simple. We really look up to a brand like Domino's, and we feel that, if Domino's can sell a 300 rupees pizza in 300 cities, we can definitely sell a 100 rupee Momo in 300 cities. So I think the market is big. The market is huge. We've really doubled this year from a 220 crore revenue last year. We're looking at aiming more than 450 crores. I think last September when I raised my Series C, we've more than doubled since then. So the growth is 120%. The good thing is that, we are still, unit economic positive. So that's a big push on the bank. But yeah, good times for the QSR space, for the consumer space. I think the most favorable time, what the pandemic did is that, it made the delivery business much more larger, much more bigger. So, for brands like ours, the pace of expansion really grows. Like I keep saying, there's a belly expansion happening in the country. We want to own that share of the stomach. So Wow Momo, Wow China, Wow Chicken, and you will see a Wow X, Wow Y in future.
Coming to Wow X and Wow Y, you also plan to fortify your FMCG growth with the fresh funds. Tell us the plan there and any new categories or verticals that you're looking at.
So FMCG is a very niche space for us. We have a new CEO joining. We'll be announcing that sometime in October. Okay. But yeah, I think more than from Momos, where we've completely refurbished the packaging, we've changed the entire way the product is produced. So when I initially launched the Momos, we got some feedback. We went back. We were not chasing top lines. We wanted to wow the consumer with the product. We've come back with a new packaging, with a new technology where every Momo gets into a cavity. So the Momos don't stick, they don't break. It comes in a tray. So the first person to touch the Momo with the hand would be the consumer. You can use that tray and microwave it in your house. You can steam it in your house. So very excited and very kicked about that. I think that gets relaunched in the first week of October. Okay. But more than that, I'm very, very excited about a few other stuff that we're doing. We're coming up with a full range of Chinese sauces. So you will see 8 new types of sauces. The Momo chutney to begin with. And then we have a product called thukpa, which is soup with noodles. So we are entering the kappa thukpa category, which is going to be a new category creator. We feel that, thukpa as a product can be a new category that we can create. And it just adds on to the largely growing kappa noodle business in India.
Okay, and how soon will we see the sauces and the thukpa noodles in the market?
So we're looking at sauces sometime in the beginning of next year, around January, February, and we're looking at the thukpa hopefully around the same time, maybe even a bit quicker if we can aim for winter. So December is the target for the thukpa, but the sauces would be there by January, February next year.
All right. Sagar, coming back to the ready-to-eat momos that you were talking about that you launched earlier, you've sort of gone through a rechristening in terms of production technology and refreshed packaging. Tell me, what is the big play? And also, have you expanded Big Basket? Which platforms will it be available on?
So
and you say you're launching in October. Yeah,
not yet beyond Big Basket. So initially we launched on Big Basket. We went exclusive with them. We wanted to try the product. We wanted to get consumer feedback. We got the consumer feedback. We heard our customers, and now we are back with a technology where the momos don't break, they don't stick. They completely get produced through a machine. They get into the conveyor bin through a conveyor belt. They go to the IQF. They come out completely packed. So the first person to touch the momo with the hand will be the consumer. So it's zero human touch made momos. It's more healthy. And also, we've tweaked the flavors a bit. There's going to be more juiciness to the product. There is no MSG, because as a brand, we believe in health, hygiene, happiness. That always comes first for us. So zero MSG, zero preservative. You are going to see a rocking wow product coming in the FMCG space for sure. I'm very excited about it because somewhere I feel this is going to be the next disruption, 2 minutes momo and tasty.
All right. Okay, we'll surely look forward to that. But Sagar, you've always claimed that the focus has been on sharp unit economics and sustained profitability. Tell me, what is the revenue split today between the brands? You've spoken about the top line, but where do you see the next leg of growth coming from? You've entered the tier 2 markets as well. What are the new trends that you see emerging?
So, I feel that consumerism in our country is really evolving, really growing, especially with the D2C space operating parallelly with the way the restaurants are flourishing, right? Like I said, we will be entering around 24, 25 cities this month, but we have a long headway in the long run. The first target is, to get to 100 cities, which will take another 2 years for us. We're currently at 450 crores for this year. I think we should touch more than 850 crores next year. So that's, literally doubling every year. The good thing is that, we've always been very focused on unit economics. So in spite of growing at 100%, we are still EBITDA positive at a corporate level. So that's kudos to the team. But yeah, I think that's going to be something that, we are going to be very, very cautious about. We are going to look at growth. There will be a question between growth versus profitability, but, we would want to not call it versus, we would want to call it growth and profitability. There are questions about, buying, building, buy versus build, create. And I think that's what, creates disruption, for a homegrown brand like ours. Very, very keen and very, very looking forward to, becoming one of that first homegrown QSR chain, that can go right up there, create a 1,000 crore top line, maybe hit the public markets and create a bang.
All right, Sagar, we've completely run out of time, but wish you the very best for all your future growth plans. And it's always a pleasure talking to you.
Thank you. Thank you so much, Shruti. Pleasure being here.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.